Welcome to the deep dive. Today we're looking at something that, well, it really shows how the whole game has changed in the global race for artificial intelligence. It's not just about who's got the best algorithms anymore or, the biggest supercomputers. The real battleground, it seems, has shifted to something maybe less glamorous, but absolutely essential, high-quality data.
That's spot on. Yeah, for a long time, it felt like everyone was focused on compute power and the models themselves. But what's really fascinating here is how one company, Scale AI, kind of flew under the radar to become this crucial data provider for almost every major AI lab out there. They were like the neutral Switzerland for AI data, you could say.
Exactly, the Switzerland of data.
Mm-mm.
But then their story took this really dramatic turn, didn't it, with that massive investment from Meta.
Seismic is a good word for it.
Yeah.
A huge investment from Meta platforms.
Right. And that's what we're diving into today. We want to unpack that specific event, understand how Scale AI went from being this neutral utility player to what people are now calling a quasi-captive asset for Meta. And we'll definitely explore the immediate fallout, this idea of the balkanization of the AI data supply chain. So by the end of this, you should have a much clearer picture of this new kind of fractured AI landscape and why this one deal really reset the competition.
Okay.
So to really get a handle on just how big this shift is, where should we start with Scale AI? What was the original problem they were trying to solve? It wasn't world domination from day one, right?
No, not quite. It's actually a pretty relatable story. It starts with Alexandr Wang when he was a student at MIT. He basically just wanted to figure out which of his roommates kept stealing food from their shared fridge.
Okay, a classic roommate problem.
Exactly. So he put a camera in the fridge, tried to build an AI to monitor it, but he immediately ran into this huge problem. It wasn't the algorithm that wasn't the hard part. It was getting enough good labeled data pictures of what was supposed to be in the fridge, what wasn't, to actually train the AI. And that frustration, that bottleneck, led him to this really core insight. Data is the new code.
Data is the new code. Wow.
Think about it, right? Programmers always obsessed over the code, the algorithm, the AI's brain. But Wang realized the brain is kind of useless without the fuel high-quality data. It wasn't just a small tweak. It was seeing the whole value chain differently. That insight basically built the foundation for Scale AI.
That's a powerful shift in thinking, and it makes you wonder about the people who saw this so early. Tell us a bit about the co-founders, Wang and Lucy Guo. They were both pretty young, right? Dropouts.
Yeah, brilliant young dropouts. Alexandr Wang, born 97, grew up in Los Alamos, New Mexico. His parents were physicists there. Clearly very bright from the start, competing in things like the USA Computing Olympiad, Math Olympiad. Taught himself coding online, finished high school early, worked at Quora, then went to MIT. But get this, he was taking grad-level machine learning classes as a freshman. Then he drops out at 19 to start Scale AI.
19, okay. And Lucy Guo.
Lucy Guo, born 94, grew up in Fremont, California. Her parents were electrical engineers. She started coding way back in second grade. As a teenager, she was already making money building bots for online games like Neopets, selling game stuff. She dropped out of Carnegie Mellon after getting a Peel Fellowship, that big grant for young entrepreneurs. She did internships at Facebook, was the first female product designer at Snapchat, helped build Snap Maps, apparently, and then landed at Quora. And that's where she met Wang.
So, two incredibly sharp technical minds meeting at Quora, a place already obsessed with data quality. Makes sense.
Right. The perfect place for that data is the new code idea to really spark something.
So they team up, get that initial Y Combinator seed funding. Was it $120,000 in summer 2016? What was their first big strategic bet? Where did they focus first?
They made a really smart call. Autonomous vehicles. AVs. Think about it. Back then, those companies were desperate for incredibly detailed, labeled sensor data, images, video, but also that complex 3D LiDAR data that self-driving cars use to see. It was a very specific, high-value problem, and the industry had deep pockets. Wang said they were super scrappy at first, literally going booth to booth with a laptop at tech conferences like CVPR, pitching their demo.
Just hitting the pavement, basically.
Pretty much. And it worked. They landed early deals with big players like Cruise, and reportedly Tesla too. That early traction was huge, not just for revenue, but for proving the whole model worked.
Okay, so things are taking off. Sounds like a dream startup scenario.
Yeah.
But the founding partnership itself, well, it hit a snag pretty early on, didn't it? Lucy Guo left in 2018.
Yeah, just 2 years in. The official line was, Differences in vision, culture, alignment issues. These things happen in startups, obviously. But what's really interesting looking back is the decision Grow made when she left.
What was that?
She kept most of her equity, reportedly just under 5%. And that decision, well, it turned out to be incredibly smart financially. By 2025, that stake was estimated to be worth something like $1.2 billion.
Wow. Billion with a B. Making her the world's youngest self-made woman billionaire at 30.
That's the report. An amazing outcome for her, regardless of the reasons for the split.
Absolutely incredible. Okay, so putting that aside, Scale AI continues its trajectory. How did they keep fueling this hyper growth? Let's talk about the funding rounds. It seems like investors really bought into this data as infrastructure idea.
Oh, absolutely. After that YC seed money, things started moving fast. August 2019, they hit unicorn status. That's a billion-dollar valuation with a $100 million Series C led by Founders Fund. The momentum just kept building. April 2021, Series E brings in $325 million. Valuation jumps to $7.3 billion. Dragoneer, Tiger Global co-led that one. And then the really big one before Meta May 2024, a massive Series F, raising $1 billion. Excel led, but look who else joined. Amazon, NVIDIA, Intel, AMD, and Meta.
Meta was already in there in 2024.
Yep. That round alone showed just how critical scale AI was seen by all the major players. They were the essential infrastructure everyone relied on.
Until June 2025, that's when Meta dropped the bomb.
Right.
Investing $14.35 billion for a 39% non-voting stake, valuing Scale AI at over $29 billion. That wasn't just funding, that was different.
Yeah, completely different. A strategic earthquake, really. It changed the fundamental nature of scale AI in the market.
And alongside that funding, Scale's business model wasn't static either, was it? It kept evolving to follow where the AI bottleneck was.
Exactly. Very agile. You can kind of track it in phases. Phase one, say 2016 to 2019, was the data annotation engine. That initial API, human-powered labeling, their big operational innovation there was remote tasks, launched in 2017. This subsidiary built up this huge global on-demand workforce for labeling tasks. It gave them incredible scale.
But that remote tasks model also brought some controversy, right?
Yeah.
Around pay and working conditions.
Yes, that's definitely part of the story. Persistent questions and criticisms about how those contract workers were treated. It's a tough balancing act, that kind of global workforce model.
Right. So after that initial phase focused on AV data labeling, what was phase two?
Phase two, maybe 2020 to 2022, was about expanding into enterprise and government. Moving beyond just AVs, they landed clients like GM, PayPal, even OpenAI was an early customer. A key moment seems to have been Wang's trip to China in 2018. Apparently, it really focused his thinking on the national security side of AI. That led to a big push into U.S. government work. They won a big $249 million DoD contract in 2021, launched Scale Donovan for government work, and brought in Michael Kratsios.
The former U.S. Chief Technology Officer.
That's the one. Hiring him in 2021 really signaled that government and defense were becoming core pillars.
Okay, so AVs, then enterprise, then government. What's phase three?
Phase three, from 123 onwards, was the big pivot to generative AI. When ChatGPT exploded onto the scene, the whole game changed again. The bottleneck wasn't just simple image tagging anymore. Suddenly, the most valuable thing was high-quality human feedback for training these large language models, what they call reinforcement learning from human feedback, or RLHF. Scale jumped on this fast. They launched their Scale Gen AI platform, started offering RLHF services, and even got into AI safety and alignment research with things like their SEAL leaderboards.
Always chasing the bottleneck.
Yeah.
And now there's talk of a phase four, moving beyond just infrastructure.
Yeah, the current interim CEO, Jason George, she came from Uber Eats, has talked about moving up the value chain, building actual AI applications customized for specific industries. Things like, protecting Americans or personalizing education.
Moving from selling the shovels to digging for gold themselves, kind of.
Sort of. It's a natural ambition, maybe, but it also feeds into the whole valuation debate.
Yeah, the valuation. Let's talk about that. Billions of dollars flying around. Is it justified?
Well, there's definitely a bull case. You look at the revenue growth, $250 million in 2022, $760 million in 2023, projected to hit maybe $2 billion in 2025. That's explosive growth. And if they successfully move into higher margin applications, maybe that justifies the sky-high valuations.
But there's a bear case too, right? Concerns about those multiples.
Oh, yeah. Even before the Meta deal, the valuation was something like 18 times their 2023 revenue. That's incredibly rich. After the Meta deal, it's even higher. Critics argue it's valued like a pure software company like SES, but a lot of the revenue still comes from those lower margin services, the human labeling work via remote tasks. Plus, there's the long-term threat. What happens if data labeling gets commoditized, or if synthetic data gets good enough, or if AI models get really good at labeling themselves? That could really undercut their core business.
Okay, which brings us squarely back to the Meta deal, that inflection point. Let's break that down. $14.35 billion for 49%, non-voting stake. Why that structure? Why not just buy the whole thing?
The thinking is almost certainly about antitrust. A full acquisition of such a critical piece of AI infrastructure by a giant like Meta would have faced immense regulatory scrutiny, maybe even gotten blocked. This 49% non-voting stake gives Meta huge influence, access, control over the data pipeline without triggering the same level of antitrust alarm bells. It's a very clever strategic structure, a quasi-acquisition, as you called it.
And the biggest signal maybe was the leadership change. Alexandr Wang moves to Meta.
Right. He goes to Meta to lead a new superintelligence research lab. And Jason Druge, the former Uber Eats head, steps in as interim CEO at Scale AI. That tells you a lot. It's not just about securing the data supply chain for Meta, it's also a massive acqui-hire. They didn't just buy access to Scale's tech, they bought Alexandr Wang himself.
One of the brightest young minds in AI, now working directly for Meta's AGI ambitions.
Exactly. Meta needed a win, frankly. There was a perception they were maybe falling behind rivals like OpenAI and Google. Llama 4 reportedly had a bit of a lukewarm reception. So, securing Scale's data engine and bringing Wang in-house, that's a huge, multi-billion-dollar bet to close that gap and inject new energy.
A three-pronged strategy almost. Secure the supply chain, get the star talent, and regain competitive momentum.
Precisely. But the fallout, it was immediate and predictable, really.
The balkanization you mentioned. What happened?
Well, think about it. If you're Google or Microsoft or OpenAI or XAI, are you going to keep sending your most sensitive data, your research priorities, your model training needs to a company that's now 49% owned by your biggest competitor, Meta?
No way. Absolutely not. The risk of your secrets leaking, even indirectly, is just too high.
Exactly. So the client exodus began almost immediately. Google, who was reportedly Scale's largest customer, planning to spend maybe $200 million, they announced plans to cut ties. OpenAI confirmed they were phasing out work. Microsoft, Elon Musk's XAI report, said they were also backing away fast.
That's a massive hit to Scale's customer base. Losing all those cutting-edge labs must hurt. Not just financially, but in terms of staying at the forefront.
It's a huge blow to their neutrality, which was their core value proposition. And yeah, losing those demanding frontier clients means you lose exposure to the hardest problems, the newest techniques. But of course, one company's loss is another's gain.
Right. The competitors must have been thrilled.
Absolutely. CEOs at other data labeling companies, Handshake, Turing, Labelbox, they reported demand just exploding, tripling overnight, expecting hundreds of millions in new revenue from clients fleeing stale. Suddenly, being the neutral data provider became a massive competitive advantage again. The Meta deal basically handed them a huge chunk of the market.
So what's the future look like for Scale AI now? It's got Meta's backing, massive resources, but it's lost its independence, its key clients. What are its strengths and weaknesses now?
Okay, let's break it down. Strengths. Huge financial resources now, obviously. Deep integration potential with Meta's ecosystem, especially around Llama. Liquidity for early investors. And an experienced new CEO in Druge.
Weaknesses seem pretty clear, too.
Yeah, loss of neutrality, that's the big one. Massive client concentration risk. They're now overwhelmingly dependent on Meta. The ongoing reputational risk around the remote tasks labor model. And as we said, potential for innovation to slow down without those diverse, demanding customers.
What about opportunities?
Well, they can potentially co-develop truly cutting-edge AI with Meta. They could become the dominant data engine for the entire open-source Llama ecosystem, which is still significant.
Yeah.
And they can really push that phase 4 strategy of building vertical applications, maybe leveraging Meta's platforms.
And the threats.
Empowered competitors are now nipping at their heels. The long-term threat of synthetic data or AI doing its own labeling hasn't gone away, and there's always the chance of future antitrust scrutiny, even with the non-voting stake structure. Regulators might look closer down the line.
This deal really seems to ripple outwards, affecting the whole AI startup scene. What's the message here for other infrastructure startups?
The message is stark. Neutrality is fragile. AI infrastructure is now clearly a strategic battleground for big tech. If you're building something essential, you have to assume the giants might try to capture you or your platform. Startups now need to think about strategic alignment, maybe even picking a side in these emerging tech blocks, much earlier than they might have wanted to.
And it reinforces that trend of consolidation, right? Big tech's venture arms dominating AI investment.
Hugely. Corporate VCs are pouring money in what? Nearly 75% of U.S. AI VC investment value now comes from corporations. It solidifies these big ecosystems: Microsoft OpenAI, Amazon Anthropic, Google DeepMind, and now Metascale AI. It makes it incredibly hard for a truly independent, new foundation model startup to get funding and compete at the highest level. The barriers to entry just got much, much higher.
So wrapping up on scale AI itself, the long-term outlook, is it bright or potentially bleak? What's the final bull versus bear take?
The bull cases. Scale thrives within the meta ecosystem. It powers Llama's development, successfully pivots to high-margin applications, and remains a critical, albeit more focused, AI powerhouse. Deeply integrated, financially secure.
And the bear case?
The bear case is stagnation. Losing those top-tier diverse clients means their tech edge dulls. They become more of an internal tool for Meta, less responsive to the broader market. Competitors overtake them, and maybe, just maybe, their core labeling business gets disrupted by synthetic data or self-improving AI down the line. It becomes a less relevant, albeit still large, company.
That's fascinating. This whole deep dive really shows how one massive strategic investment didn't just change the fortunes of one company, Scale AI, but fundamentally altered the entire competitive map for AI development. It underscores that data, high-quality refined data, and access to it truly is the new strategic high ground, the control point in this race for AI supremacy.
Absolutely. Which leaves us, and you listening, with a pretty big question to think about. In this new, more balkanized AI world where infrastructure is tied to specific giants, what does that actually mean for independent innovation? And looking ahead, where might the next strategic choke points emerge in the ongoing quest for AGI, for superintelligence, something to chew on?